First of all, I must make a confession. I've come straight from the assembly. I was invited, I saw the topic, I saw the sponsors, and I said yes. I don't know what the name of the conference is. I don't know what you all have been talking about. I have not been briefed. I think it's been so virtual that nobody's given me any printout, any document, anything. So I'm completely flying blind here. So I'm going to try and gauge what I think will be of interest or just pick up from where he left off. Let me start first by saying, from my experience in banking, there were big differences in the nature of the banking that I experienced. Right? I came very late to economics. I'd never taken an economics course till I was 33. I took my first paycheck as an employee at the age of 35. Till then I'd been doing research or consulting in my own practice. And I ended on Wall Street and I knew nothing. I had never bought a stock in my life. I didn't know the terminology. I didn't know anything. But it was fascinating because really I learned very quickly that much of fixed income is all math or applied math. Maybe at the higher levels it's a bit like operations research and higher end modeling of complexity and outcomes in structured products and volatility and things like that. And then later on I realized when my role expanded to cover equities, that equity is basically nothing but high margin IT business, right? It's simply technology, that's all. Whoever's got the fastest link, the closest machine, the best matching aggregators and so forth. A lot of finance is like that, Of course, I must confess that 1 year before Lehman went bankrupt, for personal reasons, I moved to India. I resigned from Lehman and they asked me instead to come and set up and run some things here, so I moved here. And Bear Stearns almost went bankrupt and was kind of shotgun marriage to JP Morgan. And at the time, I was so heavily involved in what we considered innovation, derivatization, securitization, the application of really high-end mathematical models without any provenance. It's not like we knew them to be right, but they were as good as anybody else, so we could sell those. And so I made the mistake of saying there are two kinds of finance. There's one that's kind of fear and greed finance, and then there's what we do, which is all about models and technology, which of course in hindsight was just naive. Right? There'll always be only one kind of finance. It's only about fear and greed. Everything else is just masking the fear or the greed or both. Right? But I must say that as much as the markets and other things had evolved in the OECD countries, in the US in particular, where I spent 20 years, but in places like Japan and Hong Kong and London and Frankfurt and places where I had some experience, I was very impressed with one thing about the Indian banking system when I came, and that was the money transfers, right? Before any other large country's reserve bank, the RBI had put in place really, really strict norms and really clear standards for transfer of funds, clearing of checks, all these things, which even today in the US, retrograde. If I try to send money from here to the US, sometimes it takes 2 days, sometimes 3 days. In 60 minutes, it gets done here. That way, I think, even before the notion of Payments Corporation of India, or before UPI, or before Fintech, India had one good thing going for it, and that was the RBI regulation on the moving and clearing of checks and funds and stuff like that. And this I'm now saying 15, 20 years ago, 2005, 6, 7. I think over time that has evolved. I spent a few years in Singapore after that with Stan Chart, and at the time Singapore was trying to find its place. I was on an advisory committee under the Monetary Authority of Singapore, how should it position itself for growth in the financial services space. And it was very clear that from a market center perspective, Singapore just would never have the heft to compete with Hong Kong. The gravity of China was so huge that China would always be a much bigger market than, a financial services market than Singapore. But at the time, we didn't see fintech coming, to be honest. But we did say you can be very big in asset management. Singapore can be, the Switzerland of Asia. And we were right in some ways, and we were right more than we knew because of various developments outside of our understanding at the time. Hundreds of billions of dollars flowed into Singapore between 2010 and 11, maybe. I think the bulk of it was 12, 13. But in impact terms, when I first went to Singapore as a banker at Stanchart, if we needed to place a $2 billion US dollar designated bond issue, let's say 5-year, we couldn't do it till New York opened and the emerging markets desks of the big banks actually started placing orders. By the time I left Singapore to return to India, we could place probably 10 billion local currency debt, open and close the book before Singapore closed, before New York opened. That much money had come into Singapore. But I think after I've left, they found another niche in the fintech space. Now, if I compare India in general and Chennai in particular, I think fintech, of course, has very high potential for India because it is part of that higher value add, moving up the chain from the base kind of service provider BPO upwards, moving towards software as a service, and then all the way up to fintech in this industry, for the financial services industry. So that's true for all of India. But in Tamil Nadu and in Chennai in particular, even back in the day in Lehman, when I was setting up what was then, and I think till now, the only kind of front office, non-STPI, tax-paying, regulated, FSA, SEC, HKMA regulated front office entity. Chennai was actually a much better at location if we had paid some mind to it, because the educated workforce, English-speaking educated workforce available in Chennai is probably second to none anywhere in the country. The costs both of operations and of living are much lower in Chennai than in Mumbai or Delhi or any of the other big places. Chennai has probably better access still, and certainly then had much better access between port and a much bigger airport or much more connected airport than Bangalore. Better infrastructure for the ratio of number of people in cars. And more significantly, the internet pipes coming into India, only come into two places, Mumbai and Chennai. So all the major pipes come into Chennai. In fact, even at Lehman, our backup data centers and our service providers were all located in Chennai. I'm saying in 2002, 2003 onwards. But the biggest reason I wanted to set up here was that there was no competition for the kind of high-end wages that we were paying. In Mumbai, there was a market because the local financial services market was there, and people could switch from the US or Hong Kong market into India and get paid local to do BSc, NSc, government bond trading. In Chennai, there was no equivalent, so that would have been a protection for us. But anyway, before anything happened, the crisis hit us. I moved on. And then I landed in Stanchart and I found that Chennai was the single biggest base for employees for Stanchart outside probably Singapore. Between their many units of scope and some local banking and all that, there were several thousand employees there, and I think there may be even more now. So I think the traditional kind of, all the way from servicing to anti-money laundering to, CFO office, P&L matching risk, credit card processing, all of that stuff happens in Chennai a lot. but that's still relatively low-end work. If I really think about the high-end work, that I'm only now becoming aware of. People like Shell, who run the big kind of commodity risk business out of here, meaning actually placing trades and managing the volume and stuff like that. People like hedge funds like the Shaw and big asset managers. So I think the ecosystem is also right. So this is my understanding, though I must say it's dated and probably not um, comprehensive. But as a government, I think we want to play to our strengths, and we certainly um, see some macro trends around the world favoring India, the kind of diversification away from China, the uncertainty in Europe. All of that favors greater investment in India in general. And different places in India have different levels of attractiveness. We think we are not that badly off. We weren't that badly off a year ago, and we think we've gotten better since then, and we can get even better from now. So, we want to be in that space. We want to be in the high-end innovation, value-added, software as a service, fintech, startup, unicorn and all is hard to say. Market valuations come and go and they're not always logical, but high job creation, high value creation space. And I think having companies like Payments Corporation, which I've just learned is going to have one of its bigger data centers here and have, a very integral database. For example, I'm on the GST what they call group of ministers or subcommittee for systemic reform, and there is just so much to do. I mean, so much of it has been rushed to market, and the gaps are so many of the so-called other validated SSEs. Some 80% of them are found to not be where they are supposed to be. So there's all these loopholes. So when we talk about linking to other systems, I think there's a huge opportunity for fintech in the GST system actually, because right now we have the luxury of a single source universal data capture in GST, and we don't use it for anything, we don't connect it to anything, we don't know what is happening, and the forensic work and all that is very, very, very preliminary. So I think there's a lot of opportunity there. But even there, for example, one of the things that we could really do to improve is to integrate with either the RBI's kind of RTGS NEFT system or something like the Payment Corporation, where we can cross-validate transactions and identities and the nature of flow and stuff like that. So I think as always, it takes a few bright minds. Then you have to create the ecosystem, and that's really what drives the growth of an industry. It's not there's many examples in the world of clusters of excellence and expertise forming in different fields in different parts of the world at different times. So of course our fond desire would be that Chennai becomes a center for excellence and a center for innovation in the fintech space, in the high-end financial services and software and risk assessment and kind of all the other hugely data and cross-reference intensive activities that happen in the global banking system, not just for India, for the world, but definitely India has got a lot of potential itself, right? As somebody was mentioning, in the government of Tamil Nadu, we are trying to automate as much of our processing as possible. We don't want any human interface. In fact, I've stated in the assembly, we don't want to build any more treasury buildings. We don't want to build any more kind of tax office buildings if we can help it. At one point, that was considered, at least politically considered the mark of your success. You put a building with a plaque on it, or stone inscription, opened by X. We are completely reversing that. We say we want to take everything online. except for that bottom of the pyramid layer of society that cannot access technology, that doesn't have a relative, that doesn't know where to go. And for those people, we want to go to their house. We still don't want them to come to the office. We want to go to their house and deliver the service to them, which will again require a mobile application or a link or something. So the government itself is, we're a fairly large state, a fairly large economy in dollar terms. I think about 350 billion or so. The budget this year will be, I don't know, about 35, 40, 45 billion dollars, and we'll spend maybe half of that as discretionary spending rather than just salaries and pensions. So, as I said at the CII Connect, I think last year, the government can be a buyer of services. It can be a huge booster to innovative companies. We can be your proof of concept. We can be the validator of your technology. We can be a good fee-paying customer. And if the fit is right, we're happy to be an equity investor as well. We have various funds and entities where we can invest. So I think we're quite flexible, we're quite open-minded, and we're always happy to see talent and innovation and the energy to create find a home in Tamil Nadu and in Chennai. So I'm happy to see all of you here, and thank you for inviting me.